Hi, I'm Steve Bigger, Director of Equity Research at S&P Capital IQ. Welcome to this week's edition of Equity Analyst Forum. With me today on Equity Analyst Forum is energy analyst Michael Kay. Michael, welcome to the program.
Thanks for having me, Steve.
So this week's focus stock of the week is Apache Corp, oil exploration and production company. So what do you see as the main drivers for Apache?
Yeah, so all exploration and production companies are driven by oil and gas prices and fundamentals. The main differentiator is production growth. Right now we have a situation where crude oil prices are much more desirable than natural gas prices, so we're focused on companies with a more balanced portfolio or even a higher oil mix like Apache. Specifically, Apache's free cash flow generation is expected to grow significantly through 2014. This should allow the company to improve on an already attractive balance sheet and also maintain flexibility over peers that are generally free cash flow negative. Lastly, and most importantly, Apache's U.S. growth is very strong. It recently announced a $4 billion divestiture program and a subsequent buyback and debt reduction program, which are going to be the main drivers in 2013 as the company continues to look for value.
Okay, so you touched on U.S. production. Obviously, is big in the news. We're getting a lot of traction there. So how is Apache specifically benefiting from the growth pattern there?
Yeah, so the U.S. has quickly turned into the focus of attention in the global oil patch. Apache is very exposed right now to U.S. U.S. oil production is expected to grow by about 25% by 2014 over 2012. This has really enhanced asset values and brought record amount of M&A activity to the U.S. Apache is one of the largest oil plays in the U.S. It has significant drilling programs in the Permian Basin and Anadarko Basin, two of the most prolific plays in the U.S. It grew oil production by about 19% in the first quarter year over year, so that's a very strong indication that it is executing. And lastly, a resurgence in the Gulf of Mexico should help as well. Apache has a huge acreage position in the Gulf that was kind of put on hold after the Macondo oil spill, and they should be able to generate value there as well going forward.
Okay. How about Egypt, right? So they have some exposure there. How are they dealing with that, de-risking from that region?
Yeah, so Egypt accounts for about 20% of Apache's production. The one thing I do want to note is that since the uprising, there have been no disruptions to Apache's operations in Egypt. With that said, Apache is planning to spend about $1.1 billion in Egypt in 2013. However, cash flow there is expected to be about $2.5 billion or so. So there's about $1.5 billion in free cash flow that Apache is going to reinvest in other lower risk areas. It continues to really grow its U.S. presence. That should help alleviate some of the risk as well. And it does have insurance policies on its assets there. It is the largest player in Egypt, so I really don't anticipate an all-out offing of the asset right now. So I think the company is going to continue to try to find value in the asset rather than sell.
How about the earnings outlook? And as you think about the valuation, what's your target price and what's the derivation of that?
Yeah, so we're expecting relatively flat earnings in 2013. That is coming off a very high base last year as crude oil prices averaged about $110 per barrel. However, we do expect growth next year as natural gas prices are expected to rise, production is expected to rise, and crude oil prices are expected to remain steady. So we're expecting about 15% growth in 2014 in earnings. Our 12-month target price is $110. It's based on relative metrics and a net asset value on Apache's proved reserves. I do want to note the shares are very discounted to peers right now. A lot of that is reflecting the risk that the market sees in Egypt. But I do think a lot of the initiatives the company is putting forth for 2013 will help narrow some of that discount.
Great. Thanks, Michael. And that's been this week's edition of Equity Analyst Forum. We'll see you again next time.